Justin Urquhart Stewart, he helps oversee £4 billion worth of assets of Sept Investment Management. Justin, thank you so much for coming in. Interesting times, volatile times. If we are seeing a rise today, is this going to be a new trend, or is it just going to be what we call a blip, that actually investors will sometimes put money in and take it out?
You live day by day at the moment. It can change on a sixpence very easily indeed. Yes, we're seeing a nice little relief rally. Thank you for those figures out of the States. Asia reacted, we react. Can you rely upon this? No, because markets aren't actually at the moment being driven by corporate valuations. What they're being driven by is political sentiment, or more to the point, the fact that we don't believe that any of the political policies, they're not very credible, and on that basis, therefore, what you've seen is this volatile mood without really taking into account underlying valuations of good quality stocks often.
So actually, how much notice will investors take of the beige book tonight?
Well, they have to look at every indicator they possibly can. But nonetheless, these are just individual ones. You have to look for the trends. And the trend at the moment is lower and slower. And what is quite fascinating at the moment, a lot of the things you look around the world at, there's nothing new. We know that the US has got a debt problem, really. We know the euro isn't working problem. Good heavens. So all of those elements have been there for some time. So look for the trend and prepare yourself for this lower and slower, and it's going to be very volatile.
Are we going to see a big correction on indices? I mean, you talk about valuations. Some stocks look pretty cheap at the moment.
They do, but that doesn't necessarily mean that they can't actually see further drops. And that's the bit that none of us actually know at the moment. So what does the investor do in this place? Well, the answer is you spread, and you give that good old-fashioned, it's very dull, broad asset allocation, and over lots of asset classes, not just equities and bonds. And therefore, you can actually make sure you've got some element of strength. It did work before, even when everyone decried it in 2008. Look back, and you found that actually steadily over that time, you were safer. Not perfect, but safer than you'd just been betting on just one or two asset classes.
Justin, what about actually picking stocks that seem, of better value, but also where you have the full confidence of management? Today we hear that the Yahoo CEO got fired over the phone, and also we're seeing a lot of changes at the top of Bank of America. Is this going to be a story that's going to go on until we see a lot of these U.S. corporates finding more stable future?
Yeah, I find a lovely picture in my mind of many chief executives looking at their phone slightly nervously now every time it rings, just in case it's the end of their career. No, you have to you look at the individual ones, and the answer is it's the quality of the management with a track record. And frankly, after 2 years, that's probably not too much time. But also follow the money. Take a global view. I know we always love to think we're on the edge of Armageddon. We're not. 3 years ago, we were teetering on the edge of it. Now, it's not looking brilliant, but we're not on the edge of Armageddon. Areas of the world are still growing, albeit slower.
All right, Justin, thank you so much for that. Now